Hey everyone, welcome back to Corporate Decoder. Today we are diving into Strategic Environmental and Energy Resources, Inke's or SEER's latest 10K filing, and I am willing to bet it's just as environmentally friendly as their name implies. This report reveals some concerning financial figures, a history of losses, and a substantial amount of debt. But don't worry, we'll break it all down in simple terms and see what it really means for the company. Before we get started, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. And if you have a passion for corporate decoding, then don't forget to check out the Discord in the description below. This filing is their annual report, a Form 10K, covering the year that ended December 31, 2024. This document is basically a yearly checkup. Strategic Environmental and Energy Resources, Inc., also known as SEER, is an environmental waste management and renewable energy company. Their headquarters are in Broomfield, Colorado, and they have several subsidiaries or smaller companies that operate under them. Now, before we get into the numbers, it's important to note what they call a cautionary statement. It's basically them saying that they're making educated guesses about the future, but things could change. So we should keep that in mind. SEER focuses on assembling complementary service and environmental clean technology businesses. Through its operating companies, SEER provides environmental products and solutions throughout North America and is pursuing international markets for its technologies and products. Think of them as trying to build a team of smaller companies to tackle environmental problems. They are now focusing on decarbonization, reducing carbon emissions, and strategies as well as monetization and tokenization, reducing carbon emissions and strategies as well as monetization and tokenization, reducing carbon emissions, and strategies as well as monetization and tokenization of fully insured biochar carbon credits. One of their key subsidiaries, MV Technologies, designs and sells solutions to manage hydrogen sulfide, a smelly and corrosive gas, in biogas, landfill gas, and petroleum processing operations. They also develop technologies to condition biogas, making it usable as renewable natural gas. The company currently has identified two segments, Environmental Solutions and Solid Waste. Environmental Solutions segment involves MV Technologies SEM and PelletChar, while PWS's revenue are categorized under Solid Waste segment. As of the last business day of the second fiscal quarter, or June 30, 2024, the aggregate market value of the common stock held by non-affiliates was 4,918 per share. Now, for the really important part, their financial condition, they have experienced recurring losses and has an accumulated deficit of approximately $36.2 million as of December 31, 2024. Their current debts or liabilities exceeded their current assets by approximately $13.3 million, which is quite a gap. As of December 31, 2024, the accounts receivable net of allowance for credit losses was $91,000. This means SEER isn't collecting payments effectively. For the year ended December 31, 2024, the company spent more money than they earned, which ended up being $436,100. This means that SEER is spending more cash than it's getting from its regular business activities. In 2024, the proceeds from short-term and long-term debt was $1.2 million and payments on notes payable were $0.3 million. Time to talk about the risks. Cartier acknowledges that there is substantial doubt about the company's ability to continue as a going concern. They have to comply with a lot of federal, state, and local laws, which is difficult, expensive, and time-consuming. SEER has a substantial amount of outstanding debt. This could make it difficult for them to fund future activities or respond to changing conditions. SEER relies on patents and other intellectual property rights, but there's no guarantee these will always hold up, giving them the competitive edge they need. Accidents or contamination could lead to significant expenses and legal issues. A natural disaster or terrorist attack would negatively affect their business. SEER admits they have weaknesses in their financial reporting, which could erode trust and credibility with investors and partners. Finally, SEER stated that there were no insider trading activities that occurred. Tucker might not be awake of all this. SEER is trying to position itself as a key player in the environmental and clean energy sectors, which are undoubtedly growing markets. They have unique technologies and are trying to expand internationally. However, their financials tell a different story. They are spending more cash than they're making. Their growing debt and history of losses raise serious concerns. They need to turn things around quickly. It appears SEER faces an uphill battle. They need to get a handle on their costs, secure additional funding, and successfully commercialize their technologies. Whether they can achieve this remains to be seen. Alright, that's our breakdown of SEER's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into the world of corporate filings. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.